Can you talk a little bit about the type of stocks that you trade? What gets you interested in possibly trading a stock? And could you talk about some of the maybe inherent risks or differences between OTC stocks and some of the listed names?
Sure. I like trading scams. That's where I feel most at home because I feel like I understand the agenda for the most part really well, and that allows me to have more conviction when a trade is going my way, for me to have patience to hold it for a bigger move as well as add to a winner and pyramid into that trade. So I actually don't only trade OTCs. There's certain OTCs that I like, but what I look for is I need volume, basically liquidity, and I need range. And those are kind of the two main things. So nowadays, that's pretty rare in the OTC market to get a combination of volume and range. If you get some of the sub penny stocks, they do trade hundreds of millions of shares sometimes. But if you think about it in terms of dollar volume, it's not actually that much. And I actually am not a fan of sub penny stocks, like below 1 penny, just because the way that I like to trade, again, where I cut stuff as soon as it goes against me, it doesn't really work when you get stuff that cheap, because every tick becomes a larger and larger percentage. If you have something that's what is it, 1 penny? I guess if it down ticks one, it's 1%. But if you get something that's 0.001 and it down ticks to 0.0009, that's what is that, a 9% move? So if I, trying to get out of that, I end up losing like 20% on the spread. So for that reason, that doesn't really work for me. But I like stuff that has, again, volume and range. And you can get that on OTC stocks, or you can get that on listed stocks. But when I know for sure that it's a complete scam, it's easier for me to have conviction if I'm longing it to hold for a bigger move when something's just floating up for no reason, because I know promoters are probably moving this up to eventually dump shares. And then on the flip side, once they start selling and I get short, it's easier for me to hold because I know it's eventually going to go pretty much back to zero. So that's why I really like those setups, scams in general. I also trade just normal runners, stuff like NKLA on Friday. When the daily chart really aligns, you get great liquidity. Again, you get great range, a perfect gap up, and then the typical first red day setup. I trade stuff like that. I'll trade breakouts. I mean, there's a lot of stuff that I trade, but really where my preference is trading complete scams.
And what are some of the red flags or indicators that tip you off that a stock or a promotion might be a total scam?
I think it depends on whether we're talking OTC or listed. But there's certain things. So like on OTC stocks, there's certain ways that they move when they're moving naturally. And then there's ways that they move when they're being promoted and highly manipulated. Like a classic OTC pump, you can see like every single day, it's just like a stair step, and that's just not natural price action. Other things that you can look for are like who's connected to the stock. So on OTC, you can go and look into the filings and see who owns shares of the company. And there's times where like I've seen previous complete scams, and then I go see some random volume on a random OTC, and I go dive into the filings, and I see that, the CEO of that previous scam company just happens to own 10 million shares of this company, and now it's randomly moving. When I see something like that, I'm like, okay, there's probably an agenda here. And then on listed stocks, you can go and dive into similar things in terms of who has shares, what price they have them from. You can look into who the underwriter is and see if there's any connections there based on previous scams. So all of these things can help align and just give you that conviction. And also when the price action adds up, when it does stuff that's unnatural, when it has 15 green days in a row, that's not something that would naturally happen unless someone is bringing the price back every time it dips red.
Mm-hmm.
So all those things.
Thank you. That's really helpful. And what sort of percentage would you say you're looking at the fundamentals or reading the filings versus the technical side of a chart?
I would say technicals always come first, because it doesn't matter how convicted you are on a setup. If it's not doing what you want, you're going to end up losing money on it. I think fundamentals are one of those things that allow you to have the conviction if it is working, but it's hard to give a percentage because ultimately the only thing that truly matters is the technicals. So, yeah, I'm not sure exactly how to give you a perfect answer on that question, but hopefully that makes sense.
Yeah, absolutely. I don't think there really is a perfect answer to it, but I've noticed that traders, uh, very similarly, might answer how you did, which is, the price action is ultimately what matters and what pays versus, there might help to have a little bit of understanding how to read the filings and being able to sort of marry those in some certain combination.
Exactly. Yeah. And I think there's also a danger as a short seller of becoming too attached to the fundamentals. And this is something that I learned last year. I just actually tweeted about this, but there was a particular pump, GESI, an OTC pump, where the market cap just got absolutely insane. I think it was, I'm pretty sure it was like 2 or 3 billion. You can go check the tweet, but basically it had a higher market cap than some of the companies that we know and love, like Victoria's Secret, I think Dick's Sporting Goods, stuff like that, which have, I'm pretty sure, hundreds of millions, if not billions in revenue, and it had a higher market cap than them, and it had like 50,000 cash, no revenue, stuff like that. So when you see that as a short seller, it's like, oh my gosh, this is a complete scam. I got to get short no matter what at all costs, and then they keep the scam going, and before you know it, like in this case, I was down unrealized like close to $300,000 because I was so convicted on the fundamentals, but the technicals were just not aligning. And if I look back at the chart now, like you can go look, like last June, it was literally a picture perfect breakout, like a perfect breakout. Every technical was screaming at me to cut my short and get long, but I couldn't do it because I was so focused on the fundamentals. And I got lucky that time because it stopped after it went 100%. So I only drew down 100% on that position, and then it collapsed and I ended up covering for like a 95% profit, but they're not always going to do that. And I've learned that in subsequent trades since then, where you get too convicted and you end up getting screwed because of that. So I think it's just about balancing the fundamentals with the technicals and making sure that the technicals are aligning.
Mm-hmm. And what are some of the things that you look for in terms of an entry and figuring out when you are most comfortable in terms of getting the timing right on some of these scams?
The biggest thing for me in entries is just making sure that the price action is doing what I want it to do before I get in. I guess kind of waiting for confirmation in terms of what I have seen on previous scams where they start working. And again, that's something like, if I see those stair steps, I know that it's doing that. Or if I see a daily chart just floating up day after day after day, I know it's aligning in terms of that. But for me, the entry itself is not insanely important on most of my biggest trades, just because I am just so right on the thesis that I could pretty much enter anywhere and it would just keep going in that direction. And that's why I like these scams. So the entry itself is not insanely important because once I have an entry and I'm positive on the entry with smaller size, I'll just keep scaling into a winner. And the more that it goes, the bigger size I have. So I guess I'm a little different in my entries than most people in terms of that, at least on this particular setup. If there's other setups, like say a breakout, I want to make sure that I'm buying into the support as it's floating up before it actually breaks out, stuff like that. So I have a good average and I'm not faked out. If it goes over the breakout level, then dips back under for a second. But on the scams, I really don't care that much. It's just about adding to a winner and being really patient once you have the entry.